morning, traders. Welcome to the TMT Stock Market Strategy video for Thursday, January 5th. Alright guys, well the song remains the same. We continue first 2 days out of the gate of 2017. We had markets pop up, and that's normal, not surprising mutual fund inflows that come in the first month and the middle of the month to put money to work. And with this euphoria of buying the market at these lofty levels, retail, that's what the retail public will do, and they will continue to buy here at these highs until the market changes, and then back to normal when they buy at the highs and then they sell at the lows. And that's something that for you as traders and even newbies, we have a lot of different people that follow us. This is why we want to watch and make sure that you guys are on the right side of trade, when to buy, when not to buy. A lot of people, a lot of these pundits in CNBC and Bloomberg, and keep buying at 28 forward earnings. It'd be a fool to be buying the market here. Now this is for the longer term, guys, right? Day traders really doesn't matter, but you still want to know what's going on internally, what's going on, like, if you will, under the hood of the market. Okay, well, let's get right to it. I want to recap some IBB. I want to show you money flow again on the spiders, and I also want to show you the bigger picture support levels of where I think the market will top when and if the market does break these support levels. Okay, let's get right to it. NYUD, advanced decline with volume, only one of many that it's in our TMT model. You can see here lower lows and lower highs. What does that tell you? We have divergence because we're at or near the highs now. Okay, this is not a good sign that we can't get any strength from our breadth of the market as we did here. Okay, and as we did here, we took this right out. That's fine. That confirmed that you want to be looking to buy here. But this is not a good sign, and this is one of many in our model. Next is going to be our IBB, which I want to follow up. I mentioned yesterday, I like the way that we're starting to consolidate well off the lows. We have the gap. We had the gap fill, which was perfect, and we didn't go past the low of the gap. That is nice. That tells me that buyers are eager down here. We also, it was a tough trade yesterday. Even if you wanted to get in, I was looking for it, but we gapped up, and we really never pulled back. We just literally gapped up, and we just kind of grinded higher all day. There was talk on some biotech news out there, so that kind of sparked a little bit of rally in it. We're right underneath that 200. Let's see if we get above it, or even just kind of consolidate underneath it. And then once we take that out, that'll give you confirmation that you're probably running about 297 and to 300. Okay, but I do like this on the long side. Nice volume yesterday, and you can see we're starting to intertwine here. We should start to curl back up like we did with RSI. Next is going to be GDX. I do like the way this is happening. As you all know, I like gold for 2017 in a very big way. Just don't want to be into the last flush into GDX and or GLD. Now that may not happen, all right, but the line in the sand is here. If we start to lose that little consolidation here of 1853, then we're going to easily flush way back down to at the very least 1680. Okay, but I do like we alleviated bearish symmetry of lower lows and lower highs. Right, you can see that here. There's the high, lower high, lower high, lower high, lower high, and there's that higher low. And we have this downtrend line. So what I'd like to see next is come up and then back test that trend line and then explode higher. And that'll give us the lower high from this previous low, this swing low here, and then that would solidify that this action is now headed north. Okay, so that's what I'm looking for GDX. And GLD, as you can see, GDX was the leader, and it does usually lead. The miners lead the metal itself on the first half of the new leg up. And this is what I'm looking for. And as you can see here, we're still below our TMT proprietary price channel. So still have a lot of work backing and filling to do. But if we can get a little bit of a sell-off, I want to analyze the sell-off. The sell-off is weak in volume, then I think that's going to be a buying opportunity. All right, but not right at the moment. But as the day traders on the video here that you guys follow me, I would be looking for any pullback into some good support in GLD and or GDX, or GDXJ for that matter. Next is going to be our big picture chart, and I want to just show you here. All right, this is the cash now. All right, S1. I label S1, S2, 2190. If we lose 2190, we should and probably will flush to 2075. If we lose 2075, I think all bets are off, and you're going to see 18 the lows of this double bottom low of anywhere around 1800 to 1825. Okay, that's going to be the target, and that would solidify a market top, and then we would see where we go once we get down to this area. Now, do we just go straight down? No, of course not. Nothing goes straight up or straight down. Well, straight up maybe. These are the areas, guys, I'm watching. Put these on your charts. And it could take a while. Who knows? It could be another year before we get back below these areas. Who knows? But anyway, just use caution. Everybody is long. I mean, everyone. I've never seen this in 29 years. Everybody long and still buying at a multiple of 28 times forward earnings. It's very, very disturbing that there's no fear out there. So at any given moment, the tax selling that didn't happen will happen at one point in time in this first quarter, whether it be January, February, or March. Okay. Anyway, those are levels to watch for. That's a big picture chart. Let's take a look at some money flow. As you can see here, here's the spiders. All right, we're approaching now overboard. We are overboard already as it is, but look at the volume here. Diminishing volume on the 2-day rally. Not really excited about that. And if you look at the accumulation distribution, we have a slight uptick in on-balance volume. But where is the money that's flowing into this market as we did over here, right, on the rally? All right, money is not even, there's no money. Actually, money flow index is coming out. Okay, look at the force behind the money flow. Very, very little. So that's another red flag for me anyway. Because what happens, right? Price, we confirm the move, right? So price is king. Price is what pays us. Well, money has money pushes price around, and I don't see that happening. Anyway, spiders, just want to get to what's going on here, guys. Really not much of anything. We're just kind of meandering around here. No sellers and no eager buyers, and that's what's happening. We're just kind of going back and forth. IWM was the clear winner yesterday. Money flowed into IWM, but look what's happening here. Our momentum oscillators, our MACD and RSI, not really confirming what would happen. Lower lows and lower highs continually is being grinded out. Okay, so we don't have a lot of momentum, and this is something that, again, I'm concerned about. Not that you can't take a trade in IWM, but as far as adding or building a position up here, that's insane. I wouldn't even think about it. If anything, keep an eye on that 135 level. Coincides nicely with our volume profiles, and you could see a real thin zone here. We lose that, you could see we could easily flush right back down to 126. And last is the Q is really not doing too much of anything. Tech isn't really doing much. So we have earnings that are coming up. That's going to be the next driver of this push, either going to be up and or down. So keep an eye on it, and also non-farm payrolls that are coming out as well. Have a great day, everybody. Take care.